Hello, everybody. This is Noah and John, and we are from Urban Digs. And this is Talking Manhattan, Johnny. And we are proud to do a rental market edition. We got Robert Rahmanian and Louis Adler, co-CEOs of Real New York here. Boots on the ground, Johnny. They got a lot of data coming up to them. They see what's going on. We're going to start right here. Robert, I want to start right with you. Let's get into the changing and shifting marketplace. How has the rental market in the past 4 months performed? And how did this historical rent price increases affect tenants and landlords alike?
Awesome. Thank you, Noah. I want to say thank you for giving us the platform. We love your platform and we're happy to be here. So it's a really funny time to ask that question, answer that question. 4 months ago and today, two different worlds. And I'll start with 4 months ago. We started to see all-time highs and breaking records in terms of rents. 2 months ago, I'd say we peaked in terms of where the rent levels got. And I've been doing this for 12, 13 years. I couldn't believe some of the rents that we were seeing just in June and July, and the bidding wars and the lines that you saw on TikTok, those were real and those were happening on an everyday basis for these rentals that we work on. Lou and I do rentals in all the boroughs. We're highly concentrated in downtown Manhattan, and that was it was a frenzy everywhere. So now it's beginning of November, and usually we see a seasonal change in the rental market, and it feels like it's a bit more drastic than usual. I think since late 2020, we saw rents go one direction up, and we were recovering out of COVID, and it was exciting. And landlords were throwing, Lou and I, we're a lot of times landlord whisperers. We tell the landlords where we think the rents are going, and that's our big value add. And we were giving landlords certain rents and they were renting within a week, 2-3 months ago. In certain cases, landlords, we would give them a rent. They'd say, we want $500 more. We'd shoot for it. We'd get it. And it was a just wild atmosphere. So again, things are slowing down. And it's tough to adjust, but I think again it's very seasonal, and we're getting to a place where it's a renter's market. There's a lot of window shoppers out there and testing the market, and it's something we're figuring out. So yeah.
Louis, you want to add something in?
Yeah, sorry about that. So to dive into that further, obviously, Rob and I are mostly landlord reps. We were heroes. We had our capes on since June, higher highs. We were seeing rents that were 30% plus over pre-COVID, right? Forget how much higher that we were getting since COVID. And that market changed drastically. And I think one of the reasons it changed drastically is during COVID, we didn't have the luxury of placing some of our inventory back into the seasonal rental market between June and August, right? Or some cases May. So because of that, we're seeing more inventory, more vacancy than we usually do this time of year. And it's hard to combat it, and it's hard to keep the rents up from those 4,000, 41, 4,200 rental peaks over the summer.
Right. And so, Lou, if I could just follow that up, I think I'm going to ask the question that I think everyone really wants to know, which is, where does the NYC rental market go from here? And, let me just preface this question. I should have probably done the preface before the question, but I'll just preface it by saying, when you look at what the median rent on just the listed rentals out there, I mean, I think it reached a peak of like 4,500, and since it's backed off to like 4,300 in October. So it's like, even though we've seen some of those numbers come down a little bit on the vacancy side and on the leased side, I mean, prices are only down like 5%, maybe not even 5% really since the peak. So I'm curious, and now I'll get to the question again, where are we going from here?
Yeah, I do think landlords are going to have to weather a storm now until spring. Rob and I are extremely bullish on seeing a similar market this coming summer that we saw the previous summer. One main reason is because there's just not enough new product coming to the market. Ever since the HSTPA was in place in 2019, harder for landlords to destabilize inventory, harder for landlords to construct and knock down a previous existing property. 421A program is in limbo right now. It's kind of creating a perfect storm for less supply going into next summer. And Rob and I are confident that, with the office market having such high vacancy at the moment, if that upticks a little bit, we're just not going to have anywhere near the supply we need, right? But we're reading that, there's 30-40% vacancy in the office market. When the recession that everyone's predicting hits, if it hits, right, to the extreme that people are talking about, we're extremely concerned that we're just not going to have the supply necessary.
Right. And I just want to clarify a couple of things. Robert mentioned, I believe about 4 months ago, you said that the market started to shift timeline. So I'm trying to put this in my head. So that puts us around July. Is that correct? July, the market started to shift. I guess meant the sales market started to shift in May. So I could see the rental market doing extending out a little further. And then September, I think you said a few months ago, it really started to kind of roll over. But supply is not rising. Is that correct, Lewis? You're mentioning that supply is tight and there's a macro situation going on, which is going to keep supply tight. So we got lower activity, lower volume. I mean, maybe volume is going, maybe inventory is rising a little bit, but we're not seeing surge in rental volume. Is that correct? No.
Yeah, correct. We're just not seeing, Rob and I, like we said, we focus on landlord reps. So we used to get multifamily buildings that were got renovated, turned over to be put on the market all the time. In that situation, because of the rent laws, are just not happening, right? So exactly what you're saying, that the supply is just not being created, anywhere near what we need to, solve for this demand.
Yeah, and on top of that, 421A expired. That's going to limit all rental new developments for the time being until they bring back some sort of tax abatement to build these rentals.
Right.
Right.
So Robert, yeah, go ahead, John.
No, go ahead. No, I think you were going to follow up there.
Well, I was going to say, Robert, so what do renters do? I mean, if rents are historically high and you got interest rates high and they're not considering the sales market, what's the thought process here?
So I think renters are looking for value again. I think when you spoke to a renter 2 months ago, they really didn't even know if they could afford Manhattan anymore, if they could afford even Brooklyn anymore, and thinking about going back to the suburbs or wherever they may be from. And I think I was one of those guys. So I 3, 4, 5 months ago was looking to I own a condo, was looking to sell, was looking to go buy a bigger apartment. I just had my second child and looking to expand a little bit in terms of space. And the search was really, really tough. And as I'm looking at prices that are just on the sales side, that seemed very, very high historically, with interest rates going up, I decided to put my search on hold in terms of a sale. I ended up renting my apartment. I moved into a new rental yesterday, and I'm kicking the can down the road for 2 months. I've started for 2 years, I should say, to see where the world is, and if we're in a better place to buy that. But again, I think for the masses, renters are looking for value, and the rental market is calming down right now, and I think it will be a little slow until May. And there is,
but they're not finding that value yet, right? They're not happy with it. It's almost like, Johnny, you said it's a buyer's market, but it's a buyer's beware market in the sales market. And Robert's saying it's a renter's market, but it's almost like a renter's beware market.
Well, I think you guys brought up a very interesting point, which is that, you look at what's happening in supply, and if, right now, and this is something that Noah and I've been talking about, is when is this office market going to come back? And, every week we have multiple sessions for agents. We kind of get on, we talk about what's happening in the market. And over the last couple of weeks, one of the common themes we've heard is that, wow, Midtown's packed. Basically Tuesday, Wednesday, Thursday, everybody's in the office and it's packed. There's lines for food trucks outside. I mean, it is as if it has returned, not necessarily in full, but it's packed. And so that kind of leads me to the next question, which is that, if that supply does come back, it can certainly squeeze that the rental supply even more. But I mean, are you starting to see people come back from Florida, Texas? Are you starting to see that return just in the clients you have coming through?
We're really not, honestly, especially at this point in the marketplace. I think anyone that was going to approach the New York rental market from Florida, from out of state, said, hey, let me wait until this softens, let me hold out a little bit more. We see over 85% of our tenancy at the moment of new leases has been tenancy that is relocated throughout New York City, right? That number is usually closer to 60 to 70%. So we're definitely not seeing that come back, but I think when word gets out that the market's softening a little bit, we will. I do think that, in my heart of hearts, and Rob and I being business owners, the hybrid workforce, it's definitely here to stay. But when a recession hits and when, layoffs begin to happen, you're going to want to be in the office. You're going to want to get FaceTime. And I think that's going to be resurgence in the office spaces.
Hey, Louis, just to elaborate on that a second, are you seeing or hearing any uptick in foreign businesses, foreign investors, anything else, even domestic investors, anything coming in?
We're on the office side, we're not.
On the office
when you
side.
say investors, are you talking about investors in multifamily or?
Anything,
Yeah.
and investors just looking for yield in general.
It's funny you say that. We're definitely not seeing that on the tenancy side. At the moment, that happened a little bit in July and August. We saw resurgences, and Rob and I have a forum with all of our landlords and developers about once a month, and we remember during COVID times, or when the market was trying to come back, we'd get so excited. Amex is about to send 10,000 employees back to the market. Morgan Stanley's like, everybody has to jump back in, and it would definitely, we would feel it. We would feel the uptick in demand, and that's something that just doesn't exist in the moment, right? We're not seeing that surgence back to the marketplace.
Well, so that kind of leads me to my next question, which is, if you're not seeing that, I mean, what's the OP concession side look like right now? I mean, it sounds as if we're sort of, and Noah and I just talked about this yesterday on the sales side, that it's almost like we're in the eye of the storm. And it sounds like we're sort of in that position on the rental market now, which is sort of, everything's kind of come down and we're just sort of waiting for what the next direction is going to be. And I'm curious if landlords are reacting to this sort of moment with any kinds of concessions, OPs, et cetera.
Yeah, it's a great time to have this conversation, because if we had it a month ago, I would say, no, we're not seeing the OPs, we're not seeing the month freeze, but they're starting to sprinkle across the marketplace, especially landlords that are tied to certain gross rents, tied to certain pro formas that they have to hit, because they sent their pro forma to the bank and said, this is what I'm getting. So for landlords and developers that are, need to hit certain numbers, they are sprinkling out the OP to brokers. They are sprinkling out months free. We're definitely seeing concessions back to the marketplace. It's also a conversation of like, how quickly can a broker educate their landlord developer of what's happening? It's hard to, they experienced COVID, they experienced a marketplace that I don't think anyone predicted happening over the summer of such high highs. So it's hard for them to say now the market, when you give a month free, you're essentially reducing the rent 8%. Right. So it's hard to have the conversation that it went down 8% in the last 2 to 3 weeks.
Right? Yeah. And here's the thing, sorry, no, I just wanted to add, in the past, especially in the last few months, you would maybe lower the rent $100, or you'd give 2 weeks free, and it would rent a week. It would make a material difference in how fast that apartment rent. Now you're adding an OP, if you're doing 1 month free and then kicking it into the next summer cycle, so 18 months, 60 months, 17 months, and it's still not creating that action and getting that action to get the apartment rented quickly. It's still maybe sitting. So we're in a weird place, but OPs and concessions are definitely back.
Yeah, just to jump into like, where does the tenancy go? During COVID, the secondary markets were hit even harder than the prime markets, right? Harlem, Astoria, Long Island City. There were some areas where it was really hard to find the bottom. Whereas, West Village or Williamsburg and, prime Brooklyn, we didn't feel it as much. I think we're starting to feel that again. I think those secondary markets are starting to hurt again. So when tenancy does come back and they're looking for value, I think they're going to look there. And these are neighborhoods that, we saw climb since they were affected more since pre-COVID than even prime markets, because they did have a soft market.
Well, so let me circle back to what Noah was asking, a while ago on the investor side. I mean, did these sort of tertiary markets, sort of the secondary markets, as you refer to them, I mean, are we seeing increased cap rates there? What's that cap rate situation look like in general? And I'm just curious if that's drawing any investors in with these higher cap rates, possibly.
Yeah, no, absolutely. Cap rates are rising. If, you know, seller's a real seller, they're going to have to get realistic about where the market's at. And, you know, in the Bronx, I think they're rising pretty quickly. I think in prime neighborhoods like Manhattan, sellers are going to be patient and they're not going to just give it away. But the market right now for investors is very tough, and we're seeing a huge slowdown. I think they just came out with numbers from quarter 3, and it was pretty brutal compared to you know, the trends we've been seeing. So with financing costs, you know, just rising rapidly, rents softening a bit, I think again most landlords feel like we may have touched the top of the rental market for a bit, and a potential recession looming. It's taken, you know, it's definitely slowed down, but a lot of the owners and landlords, investors we work with, they're very sharp and they see the opportunity and they know the best returns come after a recession. And
Yeah. It feels like we're setting up for some nice opportunity. I mean, I don't want to be a Pollyanna here. Number one, let me just try to wrap up a couple of high level takeaways from this interview. It sounds to me like the rental market is still in active decline. Would you guys agree with that? It's still in reset mode, kind of shifting.
We think it's temporary, but it is shifting, and it is,
Okay.
you know, shifting a little faster than we thought.
We definitely agree with that motion, but at the same time, seasonally, it usually is October into December.
Okay, so that's all right. So the macro shift in rentals probably has played its course, and now we're seeing kind of more of a less macro shift, more of a seasonal element to the market, which is a negative for this time of year. Okay, gotcha. You know, and I'm going to wrap this up because we're out of time. And I just want to ask you guys really quick, like, you know, if you can do a 30-second or less answer. You know, if I'm a broker out here and I got, I don't have a whole landlord portfolio. All right. I got a couple of sellers that are selling their place. I got a couple of rentals I'm trying to do. Is there any advice that you can give to those brokers to get through to their clients, whether it's a landlord or a tenant that's looking to market, to help with what is going on in the market today and where they might perceive the market, where that gap is that's causing this lull? Anything that you can tell those guys?
Yeah, I think first off, you know, go back to the basics, right? When you're having the conversation with your landlord, you know what happens in October, November, December, right? You know, no one's looking to move over the holidays. You know, let's transact now. Let's find a way to put the product back into the right seasonality moving forward while there's still demand. You know, so I do think that we're gonna feel that slump even more December, January, February. So let's get your product moved on the landlord side for sure.
Yep, and it just goes back to educating your client, whether it's the landlord or the renter, letting them understand, you know, where we were, where we are, and where we're going, and giving them that data that, you know, Urban Digs is great at providing. So,
I mean, ending on a plug, I love it.
Great. Well, thank you guys for joining us today and giving us some insights on what is going on in this very mysterious and dynamic and fluid situation that is the Manhattan rental market. Robert Rahmanian, Louis Adler, co-CEOs over at Real New York. Thank you for joining us today. This is Noah Rosenblatt and John Walkup of Urban Digs, and this has been Talking Manhattan, and we will catch you guys next time.